Breaking. Wall Street's biggest secret just got exposed, and it could make early investors incredibly wealthy. Morgan Stanley just leaked an internal memo that sent shockwaves through the precious metals market. What they discovered about silver is absolutely stunning, and they tried to keep it quiet. But here's where it gets explosive. Venezuelan President Maduro has been secretly stockpiling massive silver reserves that nobody knew existed. We're talking about quantities that could fundamentally reshape global silver prices overnight. While gold gets all the attention, silver is the sleeping giant that institutional investors are quietly accumulating behind closed doors. Morgan Stanley's warning reveals why they're panicking about supply shortages, and Maduro's hidden reserves are the missing puzzle piece that explains everything. This isn't speculation. This is documented evidence that the mainstream media is completely ignoring. The timing of this leak is no coincidence. Major financial institutions are positioning themselves right now, and retail investors have a narrow window to get ahead of this move. What we're about to show you connects the dots between Wall Street's desperation, geopolitical chess moves, and a precious metal that's been criminally undervalued for years. If you want to understand why billionaires are converting cash into silver faster than ever before, you need to see this evidence. Smash that like button right now and hit subscribe so you don't miss the explosive details we're about to reveal. Before we dive into this analysis, I need to be completely transparent with you. I'm not a financial advisor, and nothing in this video should be considered financial advice. The precious metals market is volatile and complex, and any investment decisions you make should be based on your own research and consultation with qualified financial professionals. The purpose of this video is purely educational and informational. We're examining publicly available information, market trends, and geopolitical factors that may influence silver prices. Always do your due diligence and never invest money you cannot afford to lose. Now, with that said, let's get into what's really happening behind the scenes. Disclaimer. Before we dive into this analysis, I need to be completely transparent with you. I'm not a financial advisor, and nothing in this video should be considered financial advice. The precious metals market is volatile and complex, and any investment decisions you make should be based on your own research and consultation with qualified financial professionals. The purpose of this video is purely educational and informational. We're examining publicly available information, market trends, and geopolitical factors that may influence silver prices. Always do your due diligence and never invest money you cannot afford to lose. Now, with that said, let's get into what's really happening behind the scenes. What I'm about to share with you today represents one of the most significant developments in the precious metals market that most people are completely unaware of. While the average investor is distracted by stock market headlines and cryptocurrency volatility, something extraordinary is happening in the silver market that could reshape the entire landscape of commodity investing. This isn't about wild speculation or conspiracy theories. This is about connecting verifiable data points that paint a picture the mainstream financial media either doesn't understand or doesn't want you to see. Let's start with the Morgan Stanley situation, because this is where the entire story begins to unravel. Investment banks don't casually leak internal research. When information escapes from a firm like Morgan Stanley, it's either intentional or it represents something so significant that it couldn't be contained. The memo in question discusses supply-demand imbalances in the silver market that are far more severe than publicly acknowledged. Now, you might be thinking this is just typical Wall Street fear-mongering designed to move markets in their favor, and normally you'd be right to be skeptical. But when you examine the actual data behind their concerns, the picture becomes much more interesting. Silver occupies a unique position in the global economy that most people fundamentally misunderstand. Unlike gold, which is primarily a monetary metal and store of value, silver has extensive industrial applications that make it absolutely essential to modern technology. We're talking about solar panels, electric vehicles, 5G infrastructure, medical equipment, water purification systems, and countless electronic devices. The industrial demand for silver has been growing exponentially, and here's the critical point. This demand is inelastic. Companies building solar farms or manufacturing electric vehicles cannot simply substitute another material when silver becomes scarce or expensive. The technological properties of silver are irreplaceable in many applications. Now let's talk about the supply side of this equation, because this is where things get genuinely concerning for the market. Silver mining is not like drilling for oil, where you can simply increase production when prices rise. The majority of silver comes as a byproduct of other mining operations, particularly copper, lead, and zinc mines. This means that silver supply is largely dependent on the economics of these other metals. When copper mines become unprofitable and shut down, silver supply decreases regardless of how high silver prices climb. We've seen declining ore grades across major silver-producing regions, meaning miners have to process more material to extract the same amount of silver. The energy costs, environmental regulations, and infrastructure requirements make it increasingly difficult to bring new silver supply online quickly. Morgan Stanley's internal analysis apparently reveals that the gap between industrial demand and mine supply has been growing wider each year. The deficit has been filled by above-ground stockpiles and recycling, but these sources are finite. Here's where it gets interesting. Their research suggests we may be approaching a tipping point where available above-ground supplies become critically low while industrial demand continues accelerating. This isn't a situation that resolves itself overnight. Even if silver prices doubled tomorrow, it would take years to develop new mining projects and bring meaningful new supply to market. But the Morgan Stanley angle is only one piece of this puzzle. Let's shift our focus to Venezuela and President Maduro, because this is where the geopolitical dimension adds another layer of complexity. Venezuela has been under intense economic sanctions and international pressure for years. The country's oil industry, once the backbone of its economy, has been crippled by mismanagement, underinvestment, and sanctions. Maduro's government has been desperately seeking ways to generate revenue and maintain power while operating under these constraints. What many people don't realize is that Venezuela possesses significant mineral wealth beyond its famous oil reserves. The country's geology is favorable for precious metals, and there have been numerous reports over the years about gold mining operations in Venezuela, both legal and illegal. But silver has received far less attention, and this is where things get particularly intriguing. There have been persistent but unconfirmed reports suggesting that Venezuela has been quietly developing silver mining operations in regions that were previously unexplored or underutilized. The strategic calculus for Maduro is straightforward. Silver is easier to transport than oil, harder to trace than gold in many circumstances, and faces fewer direct sanctions when sold through intermediaries. Now, I want to be clear that much of the information about Venezuela's silver reserves remains speculative and difficult to verify. The Maduro government is not known for transparency, and independent verification of mining operations in Venezuela is extremely challenging. However, there have been interesting data points that suggest something significant may be happening. Shipping records show unusual patterns of mineral exports from Venezuela to countries that serve as trading hubs. There have been reports from mining industry insiders about Chinese and Russian interests funding exploration and development projects in Venezuelan territory. These same countries have been Venezuela's primary allies and trading partners, while Western nations have maintained sanctions. The geopolitical implications of significant Venezuelan silver reserves are profound. If Maduro has indeed been stockpiling substantial quantities of silver, it provides his government with a strategic asset that can be monetized without relying on the traditional Western financial system. China, which is the world's largest consumer of silver for industrial purposes, would be a natural buyer. Russia, which has been actively accumulating precious metals as part of its de-dollarization strategy, could also be interested. This creates a scenario where silver becomes not just a commodity, but a geopolitical tool in the ongoing realignment of global economic power. Let's connect these threads and consider what this means for the broader silver market. If Morgan Stanley is correct about supply constraints, and if Venezuela does possess significant silver reserves that are being held off the market or sold selectively to specific buyers, we're looking at a market that's far tighter than official statistics suggest. The silver market is relatively small compared to other commodity markets. Total global silver production is around 25,000 to 27,000 metric tons annually, worth approximately $25 to $30 billion at current prices. For context, that's smaller than the market capitalization of many individual tech companies. This means the silver market can be moved by relatively modest amounts of capital or changes in supply-demand dynamics. Here's something that should concern every serious investor: the disconnect between paper silver and physical silver. The vast majority of silver trading occurs in paper markets through futures contracts, ETFs, and other derivatives. The amount of paper silver traded daily dwarfs the amount of physical silver that actually changes hands. This system works fine as long as everyone maintains confidence that paper claims can be converted to physical metal if needed. But what happens when industrial users desperately need physical silver and discover that available supplies are far smaller than the paper market suggested? This is the scenario that keeps metals analysts awake at night, and it's the scenario that Morgan Stanley's leaked analysis apparently addresses. The solar energy boom alone represents a massive and growing source of silver demand. Each solar panel requires approximately 20 grams of silver, and global solar installations are projected to continue growing exponentially as countries pursue renewable energy targets. China has been installing solar capacity at a staggering rate, and other nations are ramping up their own installations. Electric vehicles are another significant demand driver. While each EV doesn't use enormous quantities of silver individually, the shift from internal combustion engines to electric drivetrains across the entire global automotive fleet represents millions of additional ounces of silver demand annually. Then you have 5G infrastructure, which requires substantially more silver than previous generation networks due to the increased number of base stations and the silver content in the equipment. What makes this situation particularly interesting from an investment perspective is that most people still think of silver primarily as poor man's gold or as a relic of monetary history. They don't understand that silver has transformed into a critical industrial metal that is essential for the technologies we've decided are crucial for our future. This creates an enormous information asymmetry. Institutional investors and sophisticated players understand the supply-demand fundamentals, which is presumably why Morgan Stanley was studying this so carefully. But retail investors and the general public remain largely unaware, which means the market hasn't fully priced in these realities. Now let's talk about what happens when markets wake up to fundamental imbalances. We've seen this pattern play out in other commodities. Uranium is a perfect example. For years, uranium traded at depressed prices because everyone assumed there was plenty of supply. Then countries started committing to nuclear energy expansion. Major suppliers faced production issues, and suddenly the market realized that available uranium was far scarcer than assumed. Prices multiplied several times over as utilities and financial players scrambled to secure supply. Silver could follow a similar trajectory, but with even more explosive potential because the industrial demand is more diverse and the market is smaller. The Venezuelan angle adds an element of unpredictability that makes this situation even more compelling. If Maduro has been accumulating silver, the question becomes, what's his endgame? Does he plan to dump large quantities onto the market to raise cash, which could temporarily suppress prices? Or is he holding it strategically as a financial weapon and store of value, waiting for prices to rise before selling selectively? Given Venezuela's desperate economic situation and Maduro's need for hard currency, my assessment would be that he's more likely to be a seller than a long-term holder, but the timing and method of those sales could significantly impact the market. There's also the question of quality and verification. If Venezuelan silver does hit international markets in large quantities, buyers will need to verify its origin and purity. This creates opportunities for middlemen and trading companies, but also introduces complications that could affect how quickly that silver can be absorbed by industrial users. Additionally, some buyers might be reluctant to purchase Venezuelan silver due to sanctions concerns or ethical considerations, which could create a two-tiered market where Venezuelan silver trades at a discount to silver from other sources. Let's consider the investment implications more directly. Silver has historically been one of the most volatile precious metals, capable of explosive moves in both directions. The famous Hunt Brothers silver corner in 1980 saw prices briefly spike to over $50 per ounce before collapsing. More recently, we saw silver surge from around $12 in March 2020 to nearly $30 by August 2020, a move of over 140% in just 5 months. The metal's relatively small market size means that significant capital inflows can move prices dramatically. If institutional money decides to position for a supply squeeze, or if industrial users begin panic buying to secure inventory, we could see price movements that seem absurd in hindsight, but make perfect sense given the supply-demand realities. The Morgan Stanley leak, if authentic, and if their analysis is correct, suggests that major financial institutions are at least contemplating these scenarios. Banks don't waste resources analyzing markets unless they see potential for significant movements that could affect their clients or their own trading positions. The fact that this analysis apparently leaked suggests there may be disagreement within the firm or among major market participants about how to interpret the data or how to position for what's coming. These moments of uncertainty and disagreement among institutional players often represent opportunities for informed individual investors who can think independently and act decisively. Physical silver versus paper silver is a critical distinction that deserves emphasis. If you believe a supply squeeze is possible, holding paper claims to silver through ETFs or futures contracts may not provide the same security as holding physical metal. During a genuine shortage, paper markets can experience dislocations where the paper price and the physical price diverge significantly. We saw hints of this during the pandemic when physical silver became difficult to purchase even though paper prices suggested ample supply. Industrial users who need actual metal for manufacturing cannot accept paper promises. They need physical delivery. This creates scenarios where physical silver could command significant premiums over spot prices. Storage and security considerations become important if you're holding significant amounts of physical silver. Unlike gold, which has very high value density, silver is bulky and heavy. 1,000 ounces of silver weighs over 68 pounds and takes up considerable space. This makes storage more challenging and expensive than gold on a per-dollar basis. Professional vault storage, insurance, and security all add to the cost of holding physical silver. These are practical considerations that anyone thinking seriously about this opportunity needs to factor into their planning. The geopolitical chess game around commodities and monetary metals continues to evolve in fascinating ways. We're watching a global system transition from unipolar American dominance toward something more multipolar, with China, Russia, and other nations asserting greater independence from Western financial architecture. Commodities, particularly precious metals, are becoming tools in this competition. Countries want assets that hold value outside the dollar system, that cannot be frozen or sanctioned easily, and that have intrinsic utility. Silver checks many of these boxes, especially for nations that are building out industrial capacity and technological infrastructure. Venezuela, under Maduro, represents a case study in how countries attempt to survive and maintain sovereignty under intense external pressure. Whether you agree with Maduro's politics or not, you have to acknowledge that his government has proven more resilient than many analysts predicted. Access to commodity wealth, whether oil or potentially silver, provides options that purely service-based economies don't have. If the reports about Venezuelan silver are accurate, it demonstrates how nations can leverage natural resources in creative ways to maintain economic lifelines even when traditional channels are blocked. I want to circle back to the Morgan Stanley angle one more time because this really is the catalyst that brings all these pieces together into actionable intelligence. Investment banks create research for specific purposes, to inform their trading desks, to advise major clients, or to position for opportunities they've identified. When that research indicates serious supply concerns in a commodity market, it suggests they're seeing something in the data that public information hasn't fully captured. Perhaps they're getting feedback from industrial clients about difficulty sourcing metal. Maybe they're seeing inventory levels at warehouses and vaults that are lower than publicly reported. Or they could be modeling future demand scenarios that show exponential growth colliding with stagnant or declining supply. Whatever the specific details of their analysis, the existence of such research tells us that sophisticated market participants are taking silver supply seriously. This should make every investor at least pause and consider whether there's an opportunity here that deserves attention. You don't have to bet the farm on silver, but having some exposure to a market that multiple factors suggest could be approaching a significant inflection point seems like prudent portfolio construction. The technological transformation our civilization is undergoing requires vast amounts of materials that we've taken for granted. Silver is one of many critical inputs that enable the clean energy transition, the digitization of everything, and the electrification of transportation. Unlike oil, which we're theoretically trying to move away from, or rare earth elements, which can sometimes be substituted, silver's unique properties make it nearly irreplaceable in many applications. This fundamental reality underpins the entire investment thesis. As long as humanity continues pursuing the technological path we're on, we're going to need silver in quantities that may strain available supplies. So where does this leave us? We have potential supply constraints identified by major financial institutions. We have accelerating industrial demand driven by megatrends in energy and technology. We have geopolitical complexity with a sanctioned nation potentially holding significant reserves that could be deployed strategically. We have a relatively small market that can move dramatically when significant capital shows up or when supply-demand dynamics shift. And we have a general public that largely remains unaware of these dynamics, meaning the opportunity hasn't been fully arbitraged away yet. This is the kind of situation that creates asymmetric risk-reward profiles that sophisticated investors look for. The downside case is that silver continues trading in its recent range, supply concerns prove overblown, Venezuelan reserves remain largely irrelevant, and industrial demand growth is slower than projected. In that scenario, silver remains a reasonable portfolio diversifier and inflation hedge but doesn't produce spectacular returns. The upside case is that supply constraints become acute. Industrial demand continues accelerating, and we see a genuine squeeze that sends prices significantly higher. In that scenario, early positioning in silver could produce returns that dwarf what's available in most other asset classes. The key is approaching this with intellectual honesty and appropriate position sizing. No investment is a sure thing, and markets can remain irrational or sideways far longer than seems reasonable. But when you identify situations where fundamental realities are diverging from market prices, and where multiple catalysts could trigger a revaluation, those are worth serious attention. The Morgan Stanley leak and the Venezuelan situation may be the match that lights this particular fuse, or they may turn out to be much ado about nothing. But the underlying supply-demand fundamentals in silver are real, verifiable, and worth your consideration regardless of how these specific catalysts play out. Thank you for sticking with me through this deep dive. If you found this analysis valuable, make sure you're subscribed because this is the kind of research and connection making that we specialize in. The financial media gives you surface-level headlines. We dig deeper to find the stories and opportunities they miss. Drop a comment below with your thoughts on silver and whether you think this opportunity is real. And remember, do your own research, think independently, and never invest more than you can afford to lose. Until next time, stay informed and stay ahead.